Robschild. Nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball reading. J.P. Morgan once said, "Millionaires don't need astrologers, but billionaires do," and so we begin. Most important chart going on right now is the S&P 500, the psychological level of 5,000. As you can see, we closed at 4997.92, and if you look at the top of the screen here at that H, the high of the day, 5,000.40. So we did actually break that 5,000 level intraday. We didn't just hit it, we actually broke through it. Things are looking bullish. There are lots and lots of call options waiting at that 5,000 level, which may end up keeping it from breaking through by the end of the week. We may see a little bit. I'm looking at my crystal ball here, and I'm seeing that we may end up bumping into this and it getting rejected, at least until by Friday. A lot of options contracts close on Fridays, not just the third Friday like the traditional option contracts. But so I'm actually expecting this to bounce down off of this 5,000 level tomorrow, specifically on Friday, and I do expect this to get through here. And when we do, I think that it's going to propel markets actually much higher. I think we're headed, crystal ball wise, I think we're headed into kind of a mania phase in stocks. And, with mania phases, the way I interpret it is that the stock market turns into a game of musical chairs. Everybody's bidding up the price higher and higher and higher. And then, to see who can, when we finally peak, it's a game of, who sits down first. And so, it's not a fun game. I'm not participating in this because I'm not a gambler, I'm an investor, and so I'm staying very cautious here. I'm sort of on the other side of this coin, just waiting to see markets start to break, and then I'll be involved in shorting the market through ETFs, like maybe shorting the SPY, or even just getting call contracts on UVXY, volatility index. It's an easy way to make easy money when the stock markets are collapsing, which is coming. We're all waiting for it to happen. Again, like, we don't know if it's going to take. No one knows how long it's going to take. But as I've said in other shows, I'm kind of looking for the right news, the right economic data. When everyone's starting to lose their jobs, when unemployment's really starting to noticeably go higher, when high yield corporate starts breaking down all at the same time, those are gonna be the alarm bells that go off. And then when everyone's trying to grab a chair, I'm gonna be the one actually trying to take advantage of the people that don't have a chair, and by being short. Notably, the XHB. This is the Home Builders ETF. This is a another very good leading indicator of the stock market. We broke to all-time highs today in this market, and this means that the people that are invested in home builders, people that are interested in this sector, believe that house prices are just going to keep going up, that home builders are going to be making money. Of course, there's a lag effect of the money that home builders can make, as a business. But yeah, so this was notable. We were seeing this flagging. It seemed like it didn't know where it was going to go for a while, and we are clearly breaking higher in this market, which is fairly interesting. Next chart, super quick. This is ARK Innovation, ARK K, the main central fund of Kathy Wood's funds. It's like it's an innovation. It's like hyper growth kind of companies that got so famous. The best performer of 2020, 2021. I like to keep track of this because it's like I see this as like hyper growth and like sort of a small cap index that's more interesting than just the small caps. And here as well, we were consolidating here. I was waiting to see where we would go. This is starting to look like it's breaking higher. It's getting above all of those previous candles, so I found that interesting today. Next we have Bitcoin. Bitcoin is ripping higher. According to Gareth Soloway, probably the best trader on Bitcoin, seems he believes that our target's around 49,000, 50,000 level in Bitcoin, and he's expecting it to go up to that level. I'm not participating in this, just because recent history shows that it can go all the way down to 16,000. I'm not interested. For me, this is a gamble. I'm not playing this game, and I don't care if it goes to $60 million in a year. I'm not playing this game now. I'll I step in when it collapses. Like, I think I bought here, and then I sold out probably around here, and then I shorted here. I got out. I got out based on what Gareth Soloway says. He's worth listening to more than me, but again, my hope for this channel is to try to give people like a really condensed version of a lot of channels of just the most interesting market data, the most interesting and relevant market data. My goal with these videos is to make them as compact as possible with the most interesting information with it, and trying to leave out stuff that doesn't matter as much. But this matters. Bitcoin is breaking higher. It looks like, crystal ball wise, it probably will get up to this range. He predicts these Bitcoin better than anyone I've ever heard predict any market. He has excellent crystal ball, and so it's interesting. Okay, let's move on. Last chart. This is the 30-year bond yield. Whoops. As I had said yesterday, this pattern here, we have the pole is here, we have the flag here, and I said, looks like we're breaking out, and we did. We broke out today, and so the expected move is to, this line will equal about this line, which puts us about 4.5%. I have been saying in many previous shows now for a while that it looks like we're headed to, my target is 4.7 to 4.8%, and it's based on this whole head and shoulders, sorry, let's move this out of the way, this sort of head and shoulders pattern here that's starting to look like it's really playing out. We have shoulder, head, shoulder, and so from here to here, we should expect from here to about here, in that range, essentially. And at that point, I will be investing minimally an additional 10% on top of the 40% I already have in Treasury bonds. I'll be putting at least another 10% in this range. The Fed funds futures are showing. It's actually, they opened up the beginning, the March of 2025. And that's showing now we have 6 cuts total within that time range, still priced in. And with that, when they cut, they keep cutting, and they keep cutting and cutting, and to lock in a 4.8% yield on a 30-year bond I believe is the most dry powder and best opportunity out there in markets right now, personally. And when I look into my crystal ball very deeply, I see it working out very successfully. So that's all I have for you on today's show. I hope you enjoyed, and thank you for watching. Robschild.